Good morning, good afternoon, everyone. I'm Abraham from Taralite. We're a peer-to-peer lending company based in Jakarta, Indonesia. So, peer-to-peer lending has been a global phenomenon starting from 2005 when Zopa first started in the United Kingdom. And later on, we learned that in the United States, the trend has followed with Lending Club, Prosper, all becoming very big. But of course, the highlight would be China, which currently is the largest market. So in 2014, there are more than 63 million people borrowing from peer-to-peer lending platform. And the loan outstanding in 2014 amounted to more than $16 billion. And actually the number quadrupled in 2015 into $66.9 billion. How about Indonesia though? Of course, as a firm, we strongly believe that Indonesia has the right political and economical environment for a P2P platform to thrive. And of course, the major driver is definitely the huge amount of unbanked population that stands at around 150 million up until 2015. And second, our loan penetration is also much lower compared to our neighboring countries such as Malaysia, Thailand, or even Vietnam. At the same time, the upper middle class and upper class people are becoming more affluent, having more disposable income, disposable cash to invest in. And we would need this cash to be lent out to borrowers in need. So I want to talk more about lending in particular. When we talk about lending, there are two types of lending products. First is wholesale, or lending to companies, and second is retail, lending to individuals. In Indonesia, for the past few years, major banks have been riding on the extraordinary growth of personal loan demands, which stands at around 20 to 30% compound annual growth rate per year. So their personal loan portfolio is growing much faster than their SME or corporate loan portfolio. And surprisingly, the loan performance for these personal loan portfolios is also much better. So they said, personal loan is the portfolio that is most resilient to changing economic cycles. So, what are we as a P2P platform? What do we do? What is our specialty? So our specialty is in doing personal loan, because we believe that the key ingredient for our successful P2P platform is in its ability to filter high-quality borrowers. And our core strategy is definitely to filter high-quality borrowers, be it from the unbankable or the bankable cluster. But the question is, how do we do that? Before I talk about it, I need to speak more about personal loan in particular. So there are two ways of doing personal loans in Indonesia. As a background, Indonesia as a country does not have any credit bureau. So individuals don't have any credit score in here. So the way banks do personal loans are through two methods. First, it's called CCPL, or credit card personal loan. So as the name implies, what banks do is that bank would look at individuals' credit card information that is stored in our central bank. They would look at the credit card limit, and they would gauge the person's income based on that credit card limit. So a person's monthly income usually is at around 50% of their credit card limit. So that's the first way of doing personal loan. The second way is called payroll, where banks would partner up with companies, and those companies will pay their employee salaries through those banks. And because of that, the banks manage to capture data of all the employees' level of income, and hence they can gauge the person's credit risk more accurately. And on top of that, the banks would also be able to deduct the person's salaries every month for the loan repayment. We got the chance to talk to two different banks. One major bank that does CCPL, and the other major bank does payroll or personal loan. So what we learned is that for the CCPL, the non-performing loan stands at around 4 to 5%, whereas for the payroll one, the NPL stands at around 0.5%. So we can conclude that payroll is a better way of doing personal loan due to the fact that first, we can capture the person's income more accurately, and second, we can also do auto-deduction on the person's income for their loan repayment. But as a technology company, technology allows us to do wider things than what bank normally can do, such as doing loans for Uber drivers. So banks can normally only give loans to employees whose corporates are already partners with the banks. But because we and Uber are technologically integrated, we can pull data from Uber, looking at the driver's income history, and even deduct the driver's income for the loan repayment. So we see that going forward, we can grow further with this kind of partnership, not only with ride-sharing platforms, but also with C2C marketplaces giving loan to their merchants, or O2O player giving loans to their networks. To illustrate further what I just mentioned just now, we can see in the screen here how for every loan that we give, we always have a partner. And the partner can be Uber, can be corporate, can be a C2C marketplace, or anything. And whenever a borrower candidate applies to us, we would get or pull the borrower's data from the partner's database. And then when it comes to loan repayment, we would deduct the borrower's income through those partnership with the partners as well. Sorry. On top of that, this kind of partnership also allows us to acquire borrowers with a much cheaper acquisition cost, as we don't have to acquire borrowers one by one. So this is our loan performances so far. As of May 2016, we have underwritten 162 loans as of 2016, amounting to $5,000 in average. Something worth noting here is that our non-performing loans for the past 12 months remains at 0%, and even delinquency, which means people paying later than 30 days after the loan repayment is due, our delinquency is also at 0%. So this validates our model, and with this kind of methodology, we're ready to grow. And for that reason, we're currently raising Series A, and we'll be happy to talk to you if you're interested. Thank you.
Thank you. Questions for Bram? About Taralite? About P2P lending?
Hi, thank you for your presentation. I have one question, two questions actually. So, who is the competitors in the Indonesian market? So, is it high, like severe competition here, or just a few players here? And second question is, what's the key factor? I mean, the most difficult part to expand your business in Indonesia. Could you tell me like a key factor about the business?
Sorry, do you mind repeating the second question?
Second big question is, what's the most difficult part for you to expand your business in this market?
Okay, good questions. Thank you for the question. So in terms of competitors, in terms of peer-to-peer lending platforms, there are few numbers. For example, Modalku, Investri, then Crowdo from Singapore, I think, and MulaSense. But for the ones doing personal loans, I think there are only us. I think there are only us, I think, if I'm not mistaken. And to your second question, the challenge, I think, there are many challenges, but I think the biggest challenge is in making sure our credit assessment system works, the filter. Because I think this business is a very reputation-based business. If people perceive that we can't filter borrowers right, then no one wants to be the lenders, right? So that is what we've been doing for the past 12 months. And that is why if you see in the graph, the spike only happened recently. So we kept on testing with our own money to see which method works and everything until we finally found what we do right now. I guess that's the biggest challenge for us.
Okay, thank you very much. Good luck on your business.
Thank you.
Thank you. Any more questions for P2P, about P2P lending in general?
Thanks for the presentation. Actually, your business's opportunities comes from the empty space of credit analysis, because there is no credit analysis industry in this market, not yet. But I think that time goes by, maybe government or government-backed company trying to open the credit analysis industry because it's the basic and backbone of the banking industry. So how did you compete with, or how does it innovate through that kind of situation that is coming?
Thank you for the question. Before that, may I get your name and where you're from?
I'm Eric Yu. Actually, I'm working in Cyber Agent Ventures Korea.
Okay, all right. I don't need to take note of that. All right. So thanks for the question. So I think so. Your question is the question is how the landscape would be once the government has appointed a credit bureau, right?
Yeah.
Okay.
The credit system will be developed continuously.
Okay.
Time goes by time.
Yes. I think credit analysis indeed is one of the loopholes right now. But maybe one loophole that will remain until time goes by is regulation. So right now the major lenders in the country are definitely banks, if we're talking about personal loans, because usually multi-finance leasing companies, they only want to do collateral-based loans, which is auto usually. So if we're talking about personal loan, the reason why banks cannot really move aggressively is partly because of regulation. And it's understandable because they collect savings, so they need to be careful with how they deploy their loans. One of the regulation that becomes a hurdle for banks is, for example, how they need to have a very clean record on who they lend to, starting from the data of the person. They need to capture the person's data starting from where the person works, whether or not the person is an employee, whether or not the person has a proven income or salary slip, whether or not the person has a landline to prove that that person belongs or lives in one particular area. And those things already narrow down the choices very much. Because a lot of people, they work freelance. A lot of people, they're a contract employee. A lot of people, like Uber drivers, for example, they're not employed by anyone. And banks, as far as I know, cannot underwrite those kind of people. And second thing, there are administrative regulations as well that become a burden. For example, how banks are required to have the wet signature for any loans that they give. And the question is, if the bank doesn't have any branch in one rural area, then how can they get the wet signature done, right? So we see that this kind of regulatory loopholes are also becoming an opportunity for P2P platforms like us. Thank you.
Thank you, Brian. Okay, there's a question.
Hello, I'm Kevin from East Venture. So I have two questions. The first one is, what's your competitive advantage compared to KTA or non-collateral loan by the banks? And the second thing is there any reason of no players that competing with your business in the area?
Thank you, Kevin, for the question. Answering your first question, our borrowers are basically high-quality borrowers that come from either bankable or the unbankable clusters. So if we're talking about the bankable cluster itself, they have the option to actually borrow from a bank, right? But as a matter of fact, our rate is actually as competitive as bank, if not cheaper. So for that reason, they are more incentivized to apply for our loans. And for the unbankables, they're actually, other than rate, our process is also faster. Now about the unbankable people, well, they don't have any other option because their only option is loan sharks, and we see that our value proposition will always remain because our rate is even compared to banks competitive. And second question is why no one has entered this space before, right? Well, actually, it's a hard question to answer. I don't know why no one has entered, but actually, I think many has tried. Many have tried. There's a fintech bank that has tried to do this before. There are microfinances that have tried to do this before, but it's actually honestly not easy to do. Not easy to do to have the good at the same time dynamic filtering method to filter borrowers. And even if your filtering method is good at the moment, as economic cycle change, it might become bad. So I think the challenge is in the credit underwriting itself.
Okay. We have time for one more. Okay.
Thank you. How tricky or how would collection play a part of it when you're trying to scale and at the same time you want to put the non-performing loans at a lower level?
Sorry, may I know your name and where you're from?
Sorry, Nobu Kiyohara of Excite, Excite.
Sorry?
Excite Indonesia.
Okay. Thanks for the question. So the question is how collection comes into play for our business model, right? Okay. So I think, to my understanding, collection matters more when you're doing collateralized loans. Let's say you are giving a loan that is collateralized by a car. Then when the person fails to pay, you would want to collect the car. When in our case, our loans are shorter than collateralized loans. At the same time, the nominal is also much smaller, around 25% of normal collateralized loans. And the question is whether or not we want to, knowing that it would incur a cost, if we engage a third party to do that. But usually, since we're a P2P platform, we give the choice to the lenders. So if let's say someone fails to pay, it has never happened before, but in that case, we would tell the lenders that this person fails to pay, and we would give an option for the lenders to engage a third party, and they would bear the cost for that part. Thank you.
Okay, I guess that's all. Thank you for the presentation, bro. Thank you.